morning, good afternoon, and good evening to all. Myself, Vaibhav. In today's session of Market Movers, we will be looking at this possibility of S&P 500 continuing to move lower and even going on to touch the psychologically important levels of 3000. We are seeing a downward momentum in equity segment. Yesterday onwards, we got the Federal Reserve's monetary policy outlook yesterday, and here, if we consider the economic outlook for next couple of quarters, this year included, and also till 2022, the Fed is not really optimistic on the economic front, and it is considering the scenario to prevail in a near future is likely to be economically challenging. The unemployment rate is likely to remain high. If we consider this year's projection, it is just tad short of 10%, and also for next year, the fiscal year 2021, it is likely to be more than 6%. So we are going to see elevated levels of unemployment rates, and also the economy activity is likely to remain subdued, and of course there is no question of inflation shooting up on the higher side anytime soon. So all in all, the recipe is that the federal fund rates are likely to remain at the current levels at least for next few years, and even if we consider the economic projections and interest rate projections, only 2 of 17 members of the FOMC have seen this possibility of federal fund rates going up, and most of the FOMC participating members were pretty dovish in their outlook. And of course, this gloomy scenario has also synced the economic indices around the world for the day. Most of the major equity indices around the world, starting from Asian trading session, are trading in the red, and the European equity indices for the time being are trading more than 2 percentage point lower, and also the US equity indices futures are almost 3 percentage point lower. So we are likely to see the gap up open as we get ready for the North American trading session to begin. We also got the US initial jobless claims, and for the week ended 6th of June, here we have this number at 1.54 million, which is just slightly better than the expectation of 1.55 million. And now the 4-week average stands at 2 million, which is also lower compared to the prior average of 2.284 million. So the job market, or you can say the jobless claims, are actually kind of stabilizing, but then the earlier base was pretty high. So now we are seeing some tapering off of fresh filing, but still these are concerning levels, and let's see how situation evolves. But of course, we have to be now cautious on the equity side of the financial markets, and let's see what lies in store for us as we consider the outlook for S&P 500 and gold XAU in terms of USD. Let's start with the S&P 500's technical outlook first. Here, this is the daily time frame chart, and as you can notice this turnaround, we had just 3 sessions back this sharp rally from the levels close to 3100 to almost 3200, and now we have equally sharp fall after these 3 days of consolidation closer to this resistance zone. And in today's session, I am pretty much looking at this possibility of S&P 500 getting even below 3100 levels, and that is increasingly on cards as we have this beginning of the US trading session with a negative undertone. And now coming to the daily time frame chart, this rally has been phenomenal, starting from 2200 to 3200. That's almost a 1000 points rally, close to 45 percentage point rally in the span of just little over 2 months, 2.5 months almost. And now You can even say this might be a correction in this bull run, so it can be looked at from both ways. We can't really be sure at this point in time. What we do, we don't really look for the longer term trajectory here. We are more concerned with the short to medium term perspective for the S&P 500, and here this level was crucial. Here it was pretty close to this small swing low before the all-time high was made closer to 3,400. So this was the point around the end of January where we had this consolidation and then the upward momentum resumed, and now from those levels we are again seeing selling pressure is coming back, and I think we can expect this selling pressure to sustain at least for next couple of session, and this zone 3000 zone is kind of vulnerable, and we might see the S&P 500 falling to that level or even below that if the sentiments don't improve much. Coming to the 4 hourly chart, we have this regression curve, which is of course tilted on the upside. Even this pivot point series is pointing to the upward, you can say bullish trajectory, as the price action still is well above this central pivot point, which is there around 2964. So on the medium term the things are yet to turn bearish, but as the price action remains subdued, and I think if we don't really get a fresh rebound above these first resistance of this month pivot point series, then of course the regression curve is going to flatten to some extent, and as the things will start to weigh on many of the market participants' mind, we will see renewed calls to go short, and then it will be just a matter of time when we see the 3000 back again. So here that's a strong possibility at this point in time, and now on the higher side, this zone of around 3150 to 3170 is going to be of crucial importance, crucial area to watch out for. Unless and until we get a sustained break above this level, I think it's more fulfilling or more profitable to continue to look for short selling opportunities in the S&P 500, and as I said, the target can be close to this central pivot point, and 3000 can be an excellent target zone for us, while keeping in mind the stop loss and the target price ratio as well, which will be of course bit better than 1 is to 2. So here we had that 4 hourly charts central pivot point and the first resistance series here closer to 3160, and now coming to the 1 hourly chart as well, we have this confluence of 50 and 100 SMA around 3190 zone. So taken together, these SMAs are also pointing to the possibility of bearish momentum setting in the S&P 500. Also, as you can notice, starting from Monday, the 8th of June to almost 10th of June, we had this sideways momentum prevailing in the S&P 500, and then after the FOMC announcement yesterday, we had a break below those crucial levels, and from there onwards it has been all downhill. Now, as I said on the 4 hourly chart as well, this is the area to watch out for. So unless and until we get a break above this crucial zone, I'm not really expecting the it is profitable to go long. So here anything below this level is the opportunity to go short, and now the question is, should we go short at the current moment when there has already been 3 percentage point move starting from yesterday's Federal Reserve announcement? Maybe we can simply sit on the sidelines and allow the better opportunity to come to us. So if in that case, if we see some retracement and then consolidation, anything below this crossover of these two important SMAs, I think is opportunity to go short. And as I said, this break below 200 SMA is going to accelerate the fall, and eventually the 50 SMA is also being expected to fall on the lower side, and if the price action remains subdued and continues to fall further, then of course the 50 SMA will be catching up with the price action sooner or later. So that remains on the bearish side. So all these factors taken together are pointing to this scenario where it will be prudent to continue to look for the short selling opportunities. Now for the gold is scenario is totally inverse of the equities. The gold is enjoying a bull run, and now we have this turnaround after making low close to 1670. The gold has rallied quite well in last 3 to 4 trading sessions, and even in yesterday's session we saw upward momentum setting in, and which took the gold from the lows close to 1700 to almost close to 1740. In today's session we are seeing some corrective moves, but I think this can be utilized as a fresh opportunity to go long rather than looking at it with any concern of being the loss of momentum. This can be considered as a correction, and after due retracement we can indeed think about going for fresh long positions in the gold, with the possibility of gold getting high close to this its immediate swing high placed around 1760, and that means we still have almost 3 to 4 percentage point of up move from these levels, which can be safely exploited if we adapt a prudent approach here. And for that we need to watch out for this central pivot point or this month's pivot point series, and we will need to give it more time for the consolidation to happen. Unless and until there is a fresh break below this important level of around 1720, I don't really see a reason for us to get worried about the gold here. And as we had this high established around 1740, maybe we can consider this as a retracement, and more time the gold spends around this central pivot point without falling below it, more reasons we will have to believe for the gold's possibility of moving higher from this zone as well. We have these couple of factors. This formation of lower highs and lower lows is still intact, and for that matter only we need to be a bit cautious here as well. And that's why I'm saying that we allow more time for the gold to consolidate, and if in that time there is no break below this crucial level, then I think it will be time for us to go long. So here the area to watch out for on the lower side for our trading setup as a marker for where to let go of our bullish bias in the gold is going to be this 100 SMA, which is just tied above 1700. So this is the area to watch out for. And as I said, we also have the central pivot point of monthly pivot point series. So we have these couple of factors. We also have these 200 SMA lined up around 1760, and then we have this golden crossover in the bullish territory as 50 SMA has crossed above this 200 SMA. So all in all, we have many of the factors which are pointing to the bullish trajectory for the gold, and because of that, as I said, we can consider 1700 as our area of interest, unless and until we see price action falling below that. We don't really need to get concerned, and we can continue to look for fresh buying opportunity in the price band of 1710 to 1720. And why I'm saying price band, because I can't really be sure, or nor many of the people of exact price. We have to watch out for this price band, and then as and when the consolidation happens, and as and when the opportunity comes our way after due consolidation, we will be able to exploit it to that exploit that opportunity to our advantage. So that's it from my side for today's session. If you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a profitable day ahead. See you tomorrow. Goodbye.